Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. I have a very fun one today. We'll be talking a lot about insurance, how big of an industry it is, how the entire industry is going to be recapitalized on Bitcoin, and how that guarantees Bitcoin at $1 million. People will laugh and say I'm not serious, but this is going to be mind-blowing because we're going to look at the numbers, we're going to dig into the data, and show you why it's inevitable. $40 trillion is not a typo. That is the size of the entire global insurance industry, the supposed fortress of financial stability, the world's giant risk management machine. But here's the problem. That fortress was totally built on sand. Every major insurer on Earth runs on the three same brittle pillars of fiat fragility. First is that they have fiat-denominated reserves that bleed real value every single day. Second, long-dated promises priced in a currency that's decaying faster than their actuaries can type. And third, the blind faith that central banks will always bail them out faster than reality catches up. It's like watching a fire department fill its water trucks with gasoline and praying the next fire is polite enough to not notice. You see, insurance was designed for a pre-Bitcoin world, one where time could be inflated, where liabilities could just be papered over, and where solvency was just a matter of creative accounting. But Bitcoin changes the physics because it's more than perfect money, it's truth with a balance sheet, it's collateral that doesn't decay, doesn't default, and doesn't lie, and that's where the story begins. Because if you replace a $40 trillion industry built with melting fiat with an asset that appreciates and hardens over time, the outcome is it's gradual, it's carnivorous, and it is going to be carnivorous over the next decade. Bitcoin will not coexist politely with the insurance industry, it will eat it alive. In this presentation, I'm going to show you why the core mechanics of insurance, the actuarial tables, the reserves, the reinsurance pyramids all collapse the moments that Bitcoin enters the balance sheet, not through speculation, but through arithmetic. Before we get started, a very special thanks to Horizon for sponsoring this video. Horizon helps you buy Bitcoin using your home equity without debt, monthly payments, or term limits. The Bitcoin is fully yours to custody how you'd like with no risk of forced liquidation. They're linked in the video description. I'll talk more about them at the end of the show. Now we're going to have a look at the insurance industry's nervous system and show why it's built to fail in slow motion. Remember, we had the three pillars holding up the entire $40 trillion empire together, and all three of them are made out of paper. Number one, we have fiat-denominated reserves because regulators force insurers to hold what they call risk-free assets like treasuries, corporate bonds, the usual suspects. But that phrase, risk-free, is just Wall Street comedy gold. These are assets that are guaranteed to lose purchasing power every single year. These risk-free assets yield below inflation, they debase in real terms, and yet regulators still call that solvency. It's like being forced to store your emergency food supply in a refrigerator that slowly catches fire. The capital strength that they brag about is not solvency, it's accounting cosplay. And then we have a time mismatch crisis going on. Yes, the temporal time bomb, because insurers, they sell multi-decade promises, annuities, pensions, life policies, and then they fund them with assets that rot in real time. They're promising you a payout in the year 2050 with dollars that will not buy a Subway footlong in 2030. That is not actuarial stability, it's temporal insolvency politely disguised with their spreadsheets and their fake optimism. And the longer they promise, the greater the decay. The entire model depends on no one noticing that time itself has turned toxic under fiat. And finally, the total addiction to yield. To keep the machine alive, they stretch into junk bonds, structured products, private credit, anything that looks like return in a world that is totally run out of real yield. It really is the financial version of their midlife crisis. When the treasuries stop performing, they start buying garbage with leverage. The entire insurance industry is one credit shock away from mark-to-market extinction. A 2008 style event today doesn't just bankrupt banks, it will erase insurers entirely. These are not just bugs in the system, my dearest little captains. These are the design features of a pre-Bitcoin civilization, a world that thought that you could insure time with paper promises, and that's exactly why they are about to be replaced. So now that we have diagnosed the disease, let's talk about the cure. For over a century, insurers have worshipped at the altar of risk-free assets. Remember, those are the treasuries, the corporate bonds, the paper promises blessed by the same institutions that cause the inflation that they pretend to hedge against. It's like eating cardboard for nutrition. Yeah, you can do it for a while, but eventually you're just going to die of malnutrition. Bitcoin changes that entirely because it represents the inverse of every flaw in the fiat insurance model. And we're going to look at the properties that lead to the revolution here. When it comes to inflation exposure, fiat bonds bleed, but Bitcoin doesn't. Bonds are melting ice cubes pretending to be vaults, but Bitcoin is thermodynamic collateral, a monetary constant that refuses to decay. There's a fixed supply, it's inflation proof. The longer you hold it, the stronger it gets. You don't fight inflation with policy, you fight it with physics. When it comes to liquidity, there is a clear winner because, as you're all aware, the bond markets, they close on weekends. Bitcoin never sleeps, it trades 24/7, it's borderless, it's permissionless, and it's unstoppable. The insurers will wait days for settlement, or weeks, or months. I've had literal months of this when I have insurance claims. Absolutely, I've had nightmares. But Bitcoin clears in seconds. So imagine an insurance reserve that can move faster than the crisis that it's insuring against. That is not a dream, that is a protocol, and that is the reality to be. When we talk about transparency, traditional reserves are literally black boxes. Auditors, regulators, trust us statements. You never actually see the collateral, but Bitcoin can pretty obviously flip that. Proof of reserves is no longer a quarterly ritual. It's real time, it's on chain, it's permanent, you can check it whenever you want. You don't need trust when you have verification every single 10 minutes. When it comes to portability and seizure risk, fiat reserves are hostage to jurisdictions, custodians, politics, but we all know that Bitcoin is totally borderless. It doesn't care about who's in office, what currency collapses, or which central bank sneezes. The magical orange coin is not just money, it is monetary sovereignty. An insurer holding Bitcoin isn't part of the system anymore. It is the system. The average bond returns 1 to 2% above inflation, and that's using fake CPI. The real return is actually under zero. So yeah, this is on a good day in a good decade. Bitcoin's long-term CAGR over the next decade, 2 decades, might be around 30 to 40%. That is extremely conservative, so this is not a yield curve, it is a civilizational upgrade. Holding fiat bonds is a policy decision, but holding Bitcoin is an evolutionary one. So when I say Bitcoin is the perfect insurance reserve asset, I'm not being poetic, kids, I'm being literal. It solves in one asset every fragility that makes the $40 trillion insurance machine terminally ill. And once the market realizes that fully, it will not be a debate, it will be an extinction event. This is where everything flips because in the fiat world, the longer an insurance company exists, the weaker it becomes. Its reserves slowly rot in their purchasing power, its liabilities will grow in perpetuity, and its solvency depends on how creative the accountants feel that quarter. But in a Bitcoin world, we all know that time works in reverse. An insurance balance sheet denominated in Bitcoin becomes self-reinforcing. Every block, every halving, every new epoch, the longer it exists, the more purchasing power it accrues. It is the inverse of the fiat model. Where the old system bleeds, Bitcoin compounds. Where the old system inflates, Bitcoin concentrates. And when the old system ages, Bitcoin matures. You could almost say that Bitcoin doesn't just measure time, it monetizes time. So this is the paradox. Wrap your heads around this. The lower the premiums, the stronger the reserves. So think how absurd this idea is. In fiat, insurers raise premiums to survive inflation. But in Bitcoin, an insurer could lower their premiums while increasing their reserve strength. You think this is Michael Saylor-esque financial engineering? Not even. It is just mathematical resurrection. This is the brute mathematical reality of Bitcoin appreciating. The premiums that are held in BTC don't decay, they compound. So every year, those reserves become more capable of paying future claims. It's solvency that feeds on time instead of fighting it. So if we look at the early Bitcoin CAGR of 200%, we have a 30 to 40% long-term CAGR. In the fiat model, solvency is a race against the decay, the entropy of the real world. But in the Bitcoin model, Solvency is self-propelling, a positive feedback loop baked into the code. So what happens when the strongest balance sheets on Earth start compounding instead of corroding? Well, when insurance companies realize they can store time instead of losing it, that's not improvement, that is a replacement. So yes, if strategy, Michael Saylor, if they wanted to eat the insurance industry, they probably could. And that really is emblematic of the beauty of the Bitcoin network. On an individual level, when you buy more Bitcoin, you buy more freedom, you buy more power, you buy more optionality. And when you do that as a corporation, you can pivot wherever you want. A lot of people ask, Adam, what is strategy going to do with all that Bitcoin? The real answer is whatever they want. They can pivot to do whatever. In this increasingly difficult AI world, this AI economy, where we're seeing jobs just get replaced by the robots, you can see why Bitcoin on your balance sheet is powerful. It is going to enable you to pivot wherever you need to go to survive. We've torn apart the old system, so let's build something better. Imagine an insurance model that doesn't decay in time, but compounds in truth. A mutual assurance company built entirely on Bitcoin's foundation, not a tweak to the legacy system, a total rewrite and a rewiring. Number one, what if you have premiums paid in BTC? Step one, every customer payment is denominated in sound money. No melting fiat, no currency risk, just Bitcoin, an asset that appreciates the longer it's held. Think about that. The premiums grow instead of shrinking. Every policyholder then becomes a stakeholder in the company's solvency. Every customer's payments don't fund a black hole of bonds, they fuel a treasury of compounded scarcity. This would be the first ever insurance model where time isn't your enemy, it is your collateral. Now, instead of opaque balance sheets and quarterly PDFs, the reserves can be on-chain, visible to every stakeholder every second in real time. No trust us, no auditors are reviewing, just verifiable solvency, permanent, public, mathematical. This turns insurance from a priesthood into a protocol. And claims don't have to take weeks, they can take seconds. Lightning Network and Oracle integrations, they could trigger automatic settlements the moment conditions are met. This is using the actual technology of the blockchain. No adjusters, no disputes, no Kafka-esque phone calls with a call center in Ohio, just pure code executing a truth. The claim either happened or it didn't, and Bitcoin doesn't negotiate. And there's no opaque alchemy. Finally, the death of the investment committee. No more 65-year-old men in conference rooms, gambling with your premiums on negative yield bonds, and corporate debt from companies already on life support. The Bitcoin Mutual Assurance Company eliminates the fiat casino entirely. It doesn't just invest in fragility, it stores strength. This isn't DeFi, this isn't fintech, this is the real Bitcoinization of risk management on a very broad scale, transparent, efficient, and solvent by design, a system where every policy, every payout, every reserve is not backed by faith anymore. It's backed by math, reality, factual truth. This is what is going to happen when insurance meets incorruptibility, when time, capital, and truth finally align on the same balance sheet. We are going to see self-insurance emerge because individuals, corporations, and even DeFi protocols can start doing what the insurers never could. They can build Bitcoin treasuries that appreciate over time, replacing the need for a middleman to manage risk that no longer needs managing. Why would you buy a policy from a company that bleeds when you can hold an asset that heals? This is where the drain begins. Capital flows out of insurers and into Bitcoin balance sheets, and that is going to be the silent run on fiat insurance. Then you're going to see the reinsurance giants adapt. Next, the titans, the last line of defense, they are going to be forced to reprice their entire models. They're going to start quoting policies in sats instead of dollars just to stay solvent. This is going to be the first time in history that an insurer's solvency depends not on the interest rates, but on the block height of Bitcoin. When your competitors can settle claims instantly with appreciating collateral and you're still waiting on your bond coupons that are decaying, you don't have a business model anymore. You have a countdown to your slow death. And that is going to cause a credibility crisis because that is when trust is going to collapse. The public is going to realize that bond-backed capital structures are just fake solvency, a faith-based system held together by jargon and PDFs, while Bitcoin-backed models display their reserves in real time on-chain every block. So the comparison between the two is going to be quite fatal. You can't market prudence and stability when your competitor's balance sheet is open source and totally immortal. And finally, the last stage of the death spiral, the regulators surrender. They don't adopt Bitcoin, they simply acknowledge reality. Bitcoin becomes tier 1 reserve collateral, just like gold before 1971, only it's incorruptible, it's unforgeable, and unconfiscatable. And that moment is going to be when the game ends, when the old system admits that Bitcoin is money, the insurance industry as we know it stops existing. You're not going to see headlines about it, you're not going to see fireworks or protests, you're just going to see a very quiet, irreversible migration of $40 trillion in capital from a decaying order into a self-reinforcing one. Mentioned a little bit ago, but strategy is going to become the prototype of what the next generation of insurance companies will look like, whether they realize it right now or not. What Michael Saylor did with Stretch, Strife, Stride, Strike is nothing short of structural alchemy. I think we all acknowledge that by this point. Saylor took what used to be the weakest link in insurance, which are fiat reserves, and replaced it with Bitcoinized capital that just strengthens over time. Then he created those perpetual income streams on top of reserves, so instruments like Stretch, which function exactly like insurance liabilities, except backed by appreciating collateral instead of melting debt. So think about that. The yield does not come from risk. It comes from real-time compression. It's solvency that's redefined as yield. The fiat system adjusts rates reactively to things through central banks and policy committees, but strategy adjusts them programmatically in real time to maintain market equilibrium. That's what the insurance industry calls risk-based capital, only here it's automated, it's auditable, and powered by Bitcoin, and that is the final twist: real-time solvency, transparency. They could be Allstate with a Lightning node and 640k Bitcoin of reserves, okay? This is a functioning Bitcoin treasury company, proving what an insurance model looks like when you replace policy promises with programmable collateral. Could they eat the entire insurance industry if they wanted to? Yes, absolutely they could. We're not talking about a niche market, so we need to put this in a mathematical perspective. We're talking about the largest pool of captive capital on earth, the insurance industry. $34 trillion in liabilities, $7 trillion in global premiums collected in 2024 from Allianz, $27 trillion in assets under management. That is not a market, kids. This is the gravitational core of the fiat financial system. The scale is quite massive. Every premium, every payout, every reserve dollar, all of it runs on melting collateral. And once Bitcoin becomes accepted collateral for just a fraction of this $34 trillion ocean, the implications aren't incremental anymore, they are geological. Insurance premiums make up 7.1% of the entire global GDP. That's correct. Nearly one of every $14 in the entire world economy is cycling through an industry that fundamentally doesn't understand the money that it's built on. Wrap your head around that. So when that capital base reprices in sats, the entire yield curve of civilization shifts with it. This is not a guess either, because think about an insurance policy at its core. It is a promise about the future, but Bitcoin is the first asset in history that can guarantee the future. If Bitcoin captures even 1% of this ocean, the repricing wave will echo through every balance sheet on Earth. And if it captures 10%, we're not talking about a bull market, we're talking about a new monetary epoch. The world's most fragile industry could meet the world's hardest assets, and one of them is not going to make it out alive. So we just talked about the global picture, but now we can bring it home and talk about it on a more localized scale, because even if the rest of the world hesitates, the US insurance market alone is big enough to ignite the domino effect. In the United States, $1.7 trillion in premiums per year. That's not the total balance sheet, that's just the cash flow, 1.7 trillion. To be clear, that is the exact amount of the outstanding student loans that are out there. $1.7 trillion moving through American insurance channels every single year. To put that into perspective, that's more than the GDP of Canada just in premiums. That is a Niagara Falls of fiat liquidity, and it's flowing into assets that are eroding in real time. It's like pouring champagne into a paper cup with holes in the bottom. With property and casualty, there is $934.5 billion in net premiums written in 2024. Yes, nearly $1 trillion in PNC alone, covering cars, homes, infrastructure, commercial assets, all insured by companies whose safe reserves are trapped in those low yield bonds. With life, annuity, and health, this is where it gets kind of poetic. Life insurers are selling promises that really last decades. Anyone who buys life insurance know that. We'll be here in 2070 to pay your family, but remember, the assets that are backing promises are dying faster than the policyholders. In a Bitcoin-based system, that time mismatch totally disappears. Every premium strengthens reserves, not weakens them, so the longer the policy, the stronger the payout base. So when you think I'm saying gibberish about temporal decay and temporal strength, no, it's not gibberish, it's how Bitcoin transforms insurance over long periods of time. This is not gibberish. I know I get accused of that a lot of the time, but no, you're just stupid. The US market is already a $1.7 trillion on-ramp. It doesn't need permission from the rest of the world, it just needs precedent. Once one insurer Bitcoinizes its reserves and outperforms the rest of them, regulators are not going to fight it because they're going to cause imitation of it. This is the beachhead, the moment where the dollar world accidentally open sources its solvency model to Bitcoin, and once that happens, the floodgates are going to open globally. So let's run the math. At today's Bitcoin price, $124,000, what would it take for Bitcoin to meaningfully penetrate the global insurance market? Remember, this isn't theory anymore, it's simply arithmetic. Collateralizing just 10% of liabilities, which would be $3.4 trillion, that would require over 27.4 million Bitcoin, which is obviously 6.4 million more than the total supply that will ever exist. So at current prices, it's literally impossible for even partial adoption to occur without triggering a massive repricing. In other words, the insurance industry can't adopt Bitcoin without repricing it into the stratosphere. This is not speculation, this is just math. And remember, this is only one industry. You think Bitcoin's not inevitable? Get real. We can look at what happens as you scale that at 20% of liabilities, at 50% of liabilities. Well, the demand curve starts bending reality. You're talking about entire industries, sovereign funds, and reinsurance giants all competing for that same scarce collateral, the 21 million coins, most already held by long-term believers such as me. And each new entrant into the system doesn't just join it, they reprice it for everyone else, which is great. That's why you should be buying it right now to front run these folks. So let's look at this critical insight right here. If you remember anything from this video, this is it. At $124,000 per BTC, there isn't enough Bitcoin on Earth to collateralize even a fraction of global insurance. The only equilibrium is higher prices, much higher. The moment that the insurers start trying to buy Bitcoin to secure their reserves, they'll realize that they're in a feedback loop of their own making. Each policy that they write pushes Bitcoin higher, which strengthens their solvency, which drives more adoption. That is the hyper-Bitcoinization flywheel applied to the $34 trillion insurance industry. Once it starts spinning, remember, no bank, no politician, no regulator, no bonds market can ever stop it. Bitcoin is not going to disrupt insurance by competing with it. It's going to absorb it through scarcity, transparency, and just mathematical inevitability. When a $34 trillion industry collides with a $21 million cap, you cannot even call it adoption. You're going to get a repricing on a civilizational scale. All right, now that we've established how little Bitcoin there actually is, let's ask the trillion-dollar question. What happens when the insurance industry starts competing for it? Because if only 3, 5, or 10 million BTC can realistically be mobilized as insurance collateral, the clearing price to absorb even a fraction of global liabilities has to rise dramatically. Let's start simple. At just 10% penetration, remember we just went over this, the math looks like this. With 3% BTC available, the equilibrium price is roughly $1.13 million per Bitcoin. With 5 million Bitcoin available, the equilibrium price is $680,000 per Bitcoin. And with 10 million BTC, which is a bit more pie in the sky, do you really think insurance companies are going to own almost half the network? Probably not, but still, that's $340,000 per Bitcoin. So I want you guys to take this all in. This is kind of the floor price required for insurance to exist on Bitcoin collateral. This is not speculation. The Bitcoin wizard's not giving you hype. This is literally just collateral math. math. But if you scale it up, let's look at the 20% penetration. You're looking at 1.36 million Bitcoin. You're looking at 2.27 million per Bitcoin. At that point, you're not disrupting the insurance industry. You're rewriting the yield curve for civilization. Bitcoin doesn't need an ETF narrative anymore because it has the largest captive collateral market on earth, accidentally pricing it upward. If insurers even attempt to mobilize 5 to 10 million Bitcoin, the clearing price instantly drifts between $340K per Bitcoin to $3.4 million. The scarcity literally just does the marketing for you. The price appreciation is the requirements for equilibrium, and this is the paradox at the heart of hyper-Bitcoinization. The more that Bitcoin is used as collateral, the more expensive it must become to serve its own function. It's collateral that pulls itself up the demand curve. So if Bitcoin only captures a small fraction of the global insurance market, we're not just talking about a bull market, kids. We're talking about a liability-backed supply shock that is going to redefine money itself, risk itself, and yield itself on a planetary level. And that is how Bitcoin eats insurance. This is where everything you've seen so far converges. Bitcoin-backed insurance doesn't just compete with bond-backed insurers, it reprices the collateral layer of the entire financial system. Because in a world where capital depends on collateral, the strongest balance sheet becomes the gravity well that everything else falls toward. But what happens when the supposedly risk-free asset starts bleeding 8% a year in real terms, while Bitcoin compounds at 40% annually with zero counterparty risk? You're not going to see competition, you're going to see total inversion. Bitcoin is going to become the new base layer for the concept of solvency. Every insurer, every bank in the world, and every single fund that's still tied to fiat collateral will suddenly find itself uphill from gravity. Another thing I want to leave you guys, tattoo this onto your skull. At just 10% of the global insurance assets under management moving into Bitcoin, which is roughly 21.8 million Bitcoin, that means you hit a mathematical wall of scarcity. There simply is not enough Bitcoin to meet the demand for Bitcoin. That means the price must reprice violently upward until equilibrium is restored at 6-figure, 7-figure BTC valuations. We are going to witness the ultimate collateral inversion. The old risk-free asset is not going to die because it failed, but because something better existed. The 20th century was defined by debt collateralized by trust, but the 21st century is going to be defined by capital collateralized by truth itself. That's what this presentation means. I'm not doing a forecast. I'm not looking at a fantasy here. I'm just looking at the inevitable repricing of collateral reality. My name is Adam Livingston. I am the Bitcoin Wizard. I hope this gets you excited about the Bitcoin bull rally that's about to happen in Q4. I can feel it in my bones. If you like this content, please like this video and subscribe to the channel. It really helps me spread the orange gospel to the masses. Have a terrific day. Don't party too hard. Class dismissed. Once again, a special thanks to Horizon for supporting this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual. Later, when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you are sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.